Welcome everyone to Admiral Markets live trading room on the Tuesday the 6th of August. Glad that we're back after a week of pause. Of course, last week we didn't have any trading sessions. We're back in August with every day, or Tuesday, Wednesday, Thursdays, of course. So let's go through this short PowerPoint very quickly. We'll explain the goal of our session today, but also this risk disclaimer, of course, explaining that trading foreign exchange is considered high risk. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. All right, so thank you for your attention on that. Let's move on to, please pause it if you would like, for those who are looking at the recording. All right. So once again, welcome to the live trading room hosted by Admiral Markets. My name is Chris Svorcik. We're going to take a look at swing trading today on Tuesday. And Wednesday, tomorrow, we'll take a look at all kinds of tradings, even long-term position trading. And Thursday, we'll be focused on intraday. So it's a bit different than in July and June, because we wanted to make a bit of a split so that it's easier for you and for me, in fact, to understand what we're looking at. Because the problem was that if we look at all kind of trading, it's a bit tricky to focus on something, and I want to make sure that everyone gets something out of it. But by doing that, it's actually probably spreading ourselves a bit too thin there. So I think it's good to have a focus on Tuesday and Thursday, and on Wednesday we'll just do the old-fashioned way of everything. Okay. Don't forget that if you're new here, we have educational webinars at Admiral Markets Mondays and Thursdays. All right. 5 p.m. London time. So today you'll be seeing Trading Real Money. We're going to look at breakout strategies like break, pullback, continuation trades, for example. Make sure to follow Admiral Markets in the social media, Twitter and Facebook. And with that said, let's move on quickly to our Forex calendar, and then we'll head over to the charts. Let's see. We had, of course, the interest rate announcement on the odd. As expected, the cash rate got decreased to 2.5%. Now it's equal to the New Zealand. That had a funny effect on the odd dollar. I didn't check the odd New Zealand actually, but the odd dollar went up. Funny enough, despite the cash rate decrease, but I do think the odd is getting back to resistance. So we'll take a look at that in a second. We have pound news, in fact, very shortly from here, but that's medium impact. We have more higher impact news 1.5 hours from now at 9:30 London time. Now later on today we have New Zealand employment and unemployment rates, and we have USD trade balance and CAD trade balance. All right, I would say those are the kind of the most important today. Let's move on to our charts and take a look at start probably with the Eurodollar. Basically, I'll give you an immediate thought what I'm looking for here. Looking at the markets, I would say I scanned all of the currencies, of course, beforehand, and I would say either the Euro odd is moving back to support, in my opinion. I would say the dollar CAD, the dollar yen, they're making nice bounces to the upside. I think those could be interesting. It looks like to me dollar strength could be interesting to trade. So I'm looking, just deciding which currency pair against the dollar would be the best to do that. Not sure at the moment. That's still up for grabs. As you know, today is Tuesday, so we'll be looking more for swing trades. So sorry to disappoint you out there if you're more of an intraday trader or scalper. We will look at that on Thursday. That's the 8th of August. Okay. Today we'll be really focusing on swing trading there, but I hope you'll enjoy it as well. So, in my opinion, maybe even the Euro CAD, Euro odd, maybe the dollar. All right, so that's what we're going to be looking at primarily in today's session. Let me just give you a quick summary there. Now, we'll be scanning all these currencies and seeing which one will have the best setup. And just to remind you, there's really no rush with swing trading. Of course, we might, there's always a moment you'll miss a trade, but otherwise, normally speaking, you have plenty of time really in the Forex market, to be honest. Okay, so let's start with the Eurodollar, and I'll start with well, just quickly on the week chart because it is kind of the beginning of the week. We are stuck in a triangle here. The purple line's indicating it. We had a doji last week. All right, so that's indicating indecision. Weekly doji there. The NFP, as you know, was not so good for the dollar, so we had some upside on the euro, but that NFP upside on Friday really only created a doji on the week chart, and you can see that the high of that week touched the that trend line there, the wedge. So are we going to break to the upside? Are we going to break that trend line and continue up, or are we going to break last week's low and move down? Let's move down to the day chart. There's a critical support at 132. Now it seems that we're moving down at the moment. We moved up on NFP, but couldn't break that trend line, so it looks more like weakness to me than strength. Although we are on a 4-hour world, we are in an uptrend. You can see that the price is above the moving averages. So this makes it trickier. I mean, as I said, I'm looking more for dollar strength because the euro is set more to the upside. Or in fact, I don't know if it's set up to the upside. You could even argue that it's just going sideways, right? If you look at the 4-hour chart, recently, especially the 1-hour chart, since the 23rd of July, we've been bouncing back between 132 and 133. So I would say clearly for 2 weeks, we've hardly gone anywhere. So it's more like a sideways range in all honesty. And prior to that, there was a nice up move there, slow but surely. So not so keen on the Eurodollar, to be honest, just because of that. If I look at the 1-hour chart, I see lots of spikes up and down, which make that range. You can put a blue line at the tops with the small spike above that. Somewhere in here you can see support as well. Do I think that the Eurodollar is going to go down? I think we could see a drop here. Do I like it that much? No. All right. Yes, we do have, let me take off this fib first. Yes, we do have maybe a wedge here as well, a triangle, if you put the trend lines like this. And we're right at the triangle, or we're actually kind of pushing to break it right now. All right, we're not breaking it yet, but we're pushing to break it. So if you look at this in the orange lines, you see a clear triangle. Triangles are always great to trade. They're great continuation setups, but the thing is we don't have a trend, so we don't really have a good continuation setup. It's a triangle within a range, within the sideways move on this 1-hour chart, at least, even on the 4-hour chart. So it's a good triangle, but not a good place. All right, so even if we break to either side, we're going to bump into support and resistance very soon, and you're going to see a pullback pretty fast. So you'll have a break and a pullback almost immediately, probably, or not immediately, but there will be a pullback pretty soon. So there's no momentum, basically. You can look at the moving averages. You can see that those are flat. All right. So anytime price moves away from those moving averages, it's going to snap back, and then maybe move again. All right. So that second move could be more interesting than the first one, to be honest, on the Eurodollar. When the moving averages do not have angles, it's not likely that the price will move far away from them in one go. Does that make sense, what I'm saying? So it's not so set up. I mean, the break to the downside could indicate, as I said, that dollar strength, and we might see a fall to the minus 618 or minus 272 target. So it's not impossible to take, but I'd rather shop around and see if there's something else out there that could be maybe set up a bit better. That's my opinion. All right. Basically, very simply put, the Eurodollar is halfway a sideways range. That's all you need to know. Now, do you like to trade a currency halfway a range? Usually. No, right? You want to take it at the top or bottom? Usually. Now, sometimes you do have good trendline breaks. I'm not saying that we totally have to ignore them, but you can. I think you understand my point that it's not the best of things, right? Now, if we were to break the 132, right, then we're definitely making higher lows and lower lows. No, sorry, lower highs and lower lows. Excuse me. So maybe slowly but surely we are building on a reversal here with some head and shoulders as well. You see that on the 4-hour chart? So there's a lot of things to look at, you know, patterns and stuff like that. That's possible too. And a break of that support and trend line, you could see this. All right, but the 132 is still very important. We can draw maybe a neckline like this. That could be the neckline. All right, so any questions here, or does it make sense, or I'll just move on, okay, for the moment. We can come back to this, right? But for the moment, I think I'll leave it at that. Okay, great. So let's move on. I'll answer, good to see you, Alkana, by the way, and good to see you, Bogdan, too. And Sinisha, thank you for your comment. I'll take a look at the CAD in a second. Bogdan, thanks for asking. Holiday was good. I actually moved to a new city, so that's pretty cool. I'm enjoying it a lot. So it was very enjoyable. We're having a great time. So that's good. Thank you so much for asking. Okay, let's take a look at maybe at the pound, for example. We'll just go one by one through all these dollar pairs and identify which swing trade could be the most interesting, okay? I got a lot of lines here. Let me clean up my chart a bit on this one, okay? Because this might be a bit confusing. I'll just take everything off. We just it's okay. We'll just start from the beginning again. Let's see. I'll just take a quick look if we have a London Open trade. No, probably don't. Okay, good. So let us take a look at quickly at the weekly. I know that some of you are probably not fans of looking at such a big time frame, but I still like it to get an indication of long-term perspective. And you see, we had a bearish week last week, but we had a major wick at the bottom as well. So the Eurodollar, as you remember, had a doji, weekly doji. Pound doesn't have that, but does have a big wick. Question is, in my opinion, for those of you who like Elliott waves, bear with me. I mean, if you don't like Elliott waves, bear with me. But is this a wave 1, 2, and we're going down for 3? And is within 3, are we making a 1, 2, and then go for 3? In that case, sometime soon, sometimes maybe in the next 4 weeks or 6 weeks, we could see downside. But in any case, we shouldn't break this top. Otherwise, the whole idea is invalidated. Right? So that's one possibility. Let's keep an eye on that. The other thing, of course, could be an expansion of a correction. That's always possible. All right. So let's see. Day chart. We can see, of course, the pound dollar making that downside and then up back to the 618 fib. And now we're at the 886 fib of the 618 fib. So we're definitely at a resistance spot, let me say it this way, right? Or 786, excuse me. You can see it right here. On the 4-hour chart, you'll see it better, 786 there. That could be a resistance spot for more downside. So I'm inclined to see, to say that. But then again, we do have bullish daily candles, all right? So it's a bit of a mixture there regarding that analysis. But I am inclined to be bearish because of that, at least for some downside, to the minus 272 target, for example, to the 150 level. All right, that would be a conservative target, I would say, at the moment. That seems likely. If you look at the 4-hour chart, you can see that the oscillator made a good run down. and correction up. So that seems like a potential there, all right, for that movement, that three-wave down movement there. The thing is, we do have higher highs and higher lows, so it's always more risky to catch the turn, because that's what we're doing here. We're trying to catch the turn, and that's always a bit more trickier. If you are trading in a situation where you have an established trend with higher highs and higher lows on the 4-hour chart, that's my primary time frame for trend definition. And if you have that, then going into the 1-hour chart or using the 4-hour chart for pullbacks is a lot safer trading than trying to catch a turn, even though we have resistance close by. Okay? Waiting for price action confirmation, for example, would be a good idea to increase those odds. Now, I realize that many things I say here, not everyone maybe fully understands or has heard of, maybe, or knows. So if you have anything like that, just don't be shy and ask me, first of all. Okay? Please ask me, what is my trend definition? I would love to see your questions. Why do you do that? Why do you do that? Okay? Because the reason why I'm here is to also explain how I think the market works. Basically, I'm not trading any specific, I do have strategies, but I'm trading based on my knowledge and experience and a mixture of that. So it's all bundled up together, and I do have specific strategies like trendline breakouts, and we'll look at that, but it's a lot of knowledge and experience put into it. So if you have any questions, let me know, okay? Would love that. So so let's take a look at the 1-hour chart and see if we see that price action resistance signals at that resistance level. Right? To me, the pound looks a bit better than the euro somehow, because the euro is stuck in that range. The pound has clearly moved in a three-wave fashion to a resistance level. So that looks more like resistance. Then again, if you look at the 1-hour chart, we do see a lot of power to the upside here. That's the only thing that doesn't speak too well for it. So what could happen is that we just see some downside and then continuation in fact. All right. So that's something to be aware of, looking at the 1-hour chart and the oscillator. So there's a bit of a mixture there. That's always when you're trying to catch turns. Not all signals will be on green. That's often so. You will have contrary signals, and it'll be up to you, depending on your strategy and your analysis, if you think it's worth the risk, because that's what it all boils down to. Let's take a look at the 15-minute world quickly. You can see a small triangle here at the top. Kind of broke to the upside first, then to the downside, so a bit of a whipsaw there this morning. That's not uncommon with the pound dollar. We have divergence, of course, on the 50-minute world between those tops. So that explains this pause. That's for sure. So one thing I like about this downside is the fact that we did break this low here. We're making a lower low here on at least the lower low on the 1-hour world. Let's see. I'm trying to make a case-by-case analysis here. We have engulfing twins, couldn't break the top, moving down from here. Yeah, it's tricky. The thing is that we do have a news announcement, and those are always have adverse effects. Now, On swing trading, it would matter less than on intraday trading because our stop loss is wider, so those spikes would tend to be less important. I'm contemplating a short right in here, but I'm not all too sure. If you look at the pattern, it still is a pretty big move up move and a sideways here, so it could also be a continuation. So I'm a bit leery. I think that I'd rather be a bit more conservative, and I'd rather wait for more confirmation, a break of 153.30 support level, for example. Excuse me, I lost my voice there. So let's keep an eye on it, though. All right, but I think I'll still wait a bit because of the conflicting patterns here. All right, so let's keep it in mind, though, and see how that develops during the hour. Let's move to the Aussie. Alrighty, the Aussie is reaching a resistance, in my opinion. We can quickly start with the day chart, for example, here. Zoom in a bit. And let's see, we had a massive resistance level here that couldn't be broken, although it looked like it would break. But you can see how difficult it is to push through that level. No one wants to buy there, logically. And we did move down 400 pips. It looks like we have maybe some divergence here between the daily bottoms. For our world, we have a very strong, impulsive 4-hour candle to the upside. So that could be, mean that we could maybe move up still a bit to hit this 382 fib. If we would look at it this way, if you fib this entire down move here, right? This downside here, you put a fib on the entire move, maybe the 382 would be the turning spot, right? So we're getting close to resistance, but maybe still some smaller upside left, just a few pips there. That 382 also ties into these bottoms, right? And we know that broken support becomes resistance in the future, right? So let's take a look at this 1-hour chart, and you can see that that was very nice downside trading. Funny enough, the cash rate right in here, the decrease in the cash rate, the drop in the cash rate, actually sending this Aussie to the upside. I'll show you on a 1-minute chart quickly. Look at that. Quite funny, in my opinion. Cash rate decreases and the odd becomes more valuable. So moved up something like 70 pips and has gone sideways more or less for the last hour or so. But interesting spike there. So if we look at the lower time frames, we don't see any divergence as well, which increases the likelihood of a bit more upside to get that divergence. So that could be an interesting trade if we were intraday trading, in fact, although it would be counter trend. All right, so that's always good to know and good to realize. But looking at those lower time frames, because of that impulse, some small side continuation, upside continuation, I should say, is likely. So I'll be monitoring this 1-hour chart. If I see a rejection off the 382 at that 90-20 level, where I expect resistance, then I can either take it off that rejection candle or zoom into the 50-minute world. And what I'm looking for is the first break, first lower low. So for example, we see an up move, we see a move down and up, and then the break, sorry about that. We see an up move here, we see a move down off that level, up, and then a move down again. What I'm looking for is this first break of the lower low, indicating that we already had a lower high and now we're making lower low. at that resistance level. That's how I would tackle it. I know that this is swing trading, so you might be wondering why you're looking at a 50-minute world. It's just a trigger chart. All right. Sometimes I do use 50-minute world for triggers, only for triggers. It's based off the 1 hour world though. The trade is from the 1 hour world, but the trigger is 15. So even for swing trading, I do that sometimes. But you can also use the 1 hour candle. So let's keep an eye on that. At the moment, looking at the shorter time frames, I'm not all too convinced of the short right now. But if we move up, or if we were to move down here and do the same, I would still be interested. So not now, but probably sometime soon. Right? I don't think the short-term time frames are set up as yet, but we're clearly moving into a resistance level. We just need to wait for that price action confirmation, in my opinion, because it increases our probabilities of succeeding. If you take a short right in here, it's more difficult to, first of all, estimate where your stop loss is, because we don't know how far the short-term upside can bring us. It's unknown. Maybe it goes 30. It could go be 50 pips. I'd rather wait for that and see where it does end. Okay, we don't know that how much the upside potential is on the short term. It could overextend on the short-term time frames, and if we put a random stop loss there of 30 pips, it could be eaten by the market. So that doesn't make sense. So it makes sense to wait here. I like the downside, I like the resistance, but just not right now. Okay, and that could be annoying for some, but you have to realize that if there's anything, and you've maybe heard it before, probably you have, but if there's anything that's valuable commodity in the Forex market, is patience and discipline. Patience to wait for the opportunity to arise and to come to you. All right, very important. Really, it's difficult to have that just when you're starting out. Maybe some of you are. So it's definitely key. Let's take a look at the CAD. I promised Sinisha that, and it was on my list as well, by the way. So I agree there. Let me change this so that we can see the candles here. And the dollar yen. Those were beforehand a bit more my favorites, dollar CAD and dollar yen. So let's see how that has been developing. Shinisha is looking, by the way, to go, has a bias long around 130, 130.25, he said, which means he's looking for a retracement because now it's 130, 103.60. Just that you know his opinion there. Thanks for that, Shinisha. Great stuff. So let's take a look. Well, weekly, definitely uptrend. You can see that obviously we were that down move was so far at retracement, move back to 786 fib. Let me make that a bit bigger so you can see that. So it was a pretty good move down, but it was a retracement. It was a retest of this bottom. You have to realize that the currencies are always testing tops and bottoms. So it had space here to go and test this bottom, but once it gets closer, it could move. It could bounce, in fact, from any fib for that upside. All right. Now we don't know how much upside, but usually speaking, on a week chart, we don't see an immediate drop in one shot like this without any bounce when it does cut closer to the support. That's what happened. We had last week engulfing weekly candles on a dollar CAD. Now that's important information. So for those of you who don't like weekly charts, you can see sometimes the value of looking at it. Engulfing weekly candles is a strong price action signal. Very strong. Bounce off the 786 fib as well. Plus, we clearly see higher highs and higher lows as well. Day chart. Now that downside momentum basically has been toast. You can see we pushed through that trend line. It's orange trend line, so you can use that trend line as an indication when this correction to the downside might be over. And we had bullish daily candles ever since. Now we had a small down day on the NFP day. No, that was yesterday. Oh, we actually had an up day on the NFP. That's funny. Okay. So despite the dollar NFP, which was not that positive, as you know, was the upside there on the dollar CAD. Interesting. Eurodollar had also upside, so it's kind of funny there, but okay. Let's take a look at this 4-hour chart. Anything else to mention on this day chart? Kind of in a trend channel here, maybe. Like this. That's working pretty nicely. Good angle, not too steep. So that's a sustainable trend, and we move back to support, as you can see, and we're breaking. So that could mean a lot of space here to the upside. 4-hour chart. We got engulfing 4-hour candles right in here, in fact. Just make this a 12 EMA quickly. Yeah, that looks bullish as well. I'm not sure if we'll even get to that level, Sinisha, because we already have engulfing twins right here, actually. So I see what you mean. It would be good. It would be nice to have a bit of a bigger pullback, a bigger move down. Question is, will we get that? We do have engulfing 4-hour candles, so maybe not. Let's continue. With the 1-hour chart. Yeah, I'm not sure. It's looking pretty bullish price action here. In fact, and looking at the 4-hour chart and 1-hour chart, I would say it's probably going to make some upside here. So there are two ways to tackle it. Could be either an entry right above here with a shorter stop loss here. That would be an intraday trade. Or the same entry, but then the stop loss lower, which would be more of a swing trade. The only problem with the swing trade is that we are more exposed maybe to that potential to retrace deeper. An intraday trade would limit that risk a bit more. Yeah, marginal difference there. So let me see the difference here between the entry 103.67, 103.47. Oh, it's a very small stop loss anyhow. So that looks pretty good to me. I'm going to punch in that order personally. See how that goes. Let me do that right now. I'll do 103.70 exactly. Alrighty, and Alrighty, I have a stop loss at 103.45. It should be below. Yeah, that's because I'm going 1 pip below the 4-hour low, basically. So as you can see with Admiral Market Pros, you have a great spread. Less than a pip at the moment. Now just now a pip, so very small. All right, so that's my idea. See how that goes. I think looking at this, we're back at back at support already, and I like the fact that we broke this high on the 1-hour chart. So I could take it right in here, in fact, on the break of that. But I'm taking the second continuation away for a bit more confirmation. The difference only is anyhow 6 pips, so it's not that much. And I get a bit more confirmation when it pushes through. Stop loss is under the low here. And I'm going to take a look at the targets right now. So we're going to be, this is swing trading, so we're going to try to catch a realistic target that has an optimal reward to risk there. Now we don't want to aim for the sky. Aiming for 110 might seem like a great reward to risk, but it's not realistic. Not with the stop loss we have. So there's that balance, always that balance you need to find between a realistic target versus your stop loss and the time frame you're at. Aiming for 1.5 is, of course, not realistic. Nor is aiming even for 1.08. All right, not for a 1-hour chart swing trade. So we need to find a balance there, and that's always tricky. One thing you can do is aiming for the top. That's a conservative target. So that would be 104.10. It's actually only 30 pips. That's like a 1-to-1 trade. Not too appealing to me, but it is sometimes it is set up better. Sometimes you get a 2-to-1 at that spot, and it's a very high play percentage play because we're never guaranteed that a currency will break through resistance. But most enough we do move to resistance and either bounce from that. So aiming for that resistance as you take profit is a conservative target. It's a likely hit, right? But the reward to risk would be often lower. In this case, 1-to-1 is now what I call fantastic. So what I would do is I would rather put a fib on this move up. Looks like we had a 382 bounce. And what I'll be doing is aiming for the -272 target at 104.40. So I'll type that in. $104.40. That gives better. That's like a 3-to-1 trade almost. I like that because even if you're wrong 3 times, you're right once. No, other way around. If you're wrong twice, no, if you're wrong 3 times and you win once, you basically break even again. All right, so you got a lot of leeway there. So you can see the stats easily. Even if you're one-time break even, of those 4 you're already in the profit. All right. So we broke the high. Let's see how this goes. Now, one thing I do want to mention is that if we do move up to this level, and we will get a bounce. You have to understand that the currency always moves in sequences. It's never a straight line. It's never a one go. All right. There's always going to be ups and downs from one resistance to another, from one support to another. So when we do move up, it's not going to be a break. We're not going to crack this 104 level in one shot. We had triple top there. It's not something that is irrelevant or not important for the market? It is. If we do move up, we're going to respect that, and we're going to move down a bit. All right? We might move even down more, like this. So the trade management aspect is something I want to discuss now. When we move up, which I hope we do first of all, and if we do, we're going to respect that level most likely. High likelihood. Now, what I'm going to do with the trade management side is that when it goes up and then down, most likely we're going to have it up again. We're going to be respecting this support. All right. So the path of most likely least resistance is something like this: up to test the top, respect the top, and then retest the bottom, bounce off there. Okay, something like this, up, down, up, is likely. Then the currency will have to confirm itself. Will have to show kind of its color. What is it really? Is it going to go down or up? And in the meantime, as you can see, we are actually building a triangle like that. You see that? The triangle is a continuation pattern. So what you will see is an upside here, and then the blue continuation triangle. Now, the triangle is a high percentage continuation trade. It doesn't have to be, it's not a guarantee it will go up. There are cases where the opposite happens, but the stats are on your advantage, right? There's a higher likelihood that it will break to the upside than break to the downside because there's always a higher chance that it will break into the direction of the previous move, like this, all right? So that's when we could see our target being hit. Now, if it were to do the opposite, in maybe the 20% of the cases, 80% I would say it breaks to the upside, what I would be doing is either I will patiently wait, or if I do see a good 1 hour, 4 hour bottom here, I might move my stop loss to there to reduce my risk to the new fractal. Right? So that's a method of trail stopping you could use if you want to reduce that risk. Preferably put the stop loss underneath the triangle. Okay? So that's most likely what's going to happen. And it's good to think about these things, and so that you have an idea about the trade management side of the currency. And now you understand why triangles, why they exist, and how they are made. It all has to do with the path of least resistance. Up, down, up is very likely, just because we were not going to break that resistance in one go. And if you understand the psychology of the market, you're 2 steps ahead of the game. And you really be less and less dependent on fixed formulas of trying to beat the market in a way, okay? We're never trying to beat the market. We're always looking for opportunities. Alrighty. And that's why, by the way, if we have a loss, it's okay. We have to realize that we're looking at a string of trades over a month at least. That's the only thing that is worth your evaluation. Of course, we have to look at each trade specifically to learn from that trade, but it shouldn't influence our psychology, right? Goody good. Some tips there in between, if you were wondering. Let's take a look at the pound quickly. Sinisha is short on the pound. He's saying bearish engulfing confirmed with falling trend line 4-hour chart. Yeah, there's definitely that resistance. absolutely. So that's one of the things I like about the pound downside. I like the 786 fib. I like the lower low on the 1 hour chart. I don't like this pattern because it's more of a continuation pattern. So I really want to see a failure of that pattern and a break here to the downside before getting interested. That's why I skipped it. And yeah, it's still moving bullish to the upside. Plus we have that news event that could have adverse effects as well. So those are my primary reasons for me to sit on the sideline at the moment on the pound. But just like the euro, it is something that could be interesting. Here you can see what I said. You know, any break could see a swift move up again. Even this was swifter than I thought. Why? Because look at the moving averages. It's a range. There is no momentum to break out. Very important to realize. When you have an angle of a trend with the price above it, if it then looks back and breaks, there's power. There's interest in continuing in that trend. Here, not. Sideways. Breakouts are very, very iffy. Alrighty. Now, one thing regarding the CAD, Rai is asking, or I'm not sure which currency actually we're looking at, Ray, with regard to your comment. Could you specify that? Because I actually bounced around here a few times, so now I'm not sure which one you're looking at. I thought the dollar CAD, but not sure now. Anyhow, once you've entered a trade, just in general, I'm not sure if you join me or not. That's always your decision, as you know. Then it's best, if anything, to zoom out one time frame. Okay? Or at least keep it, don't zoom in, because the thing is that it's going to be bouncing up and down on all time frames. It's going to make you crazy. If you look at the 5-minute world, you see that we took it up on the break of this high. Doesn't necessarily mean that once we break, we're going to keep on moving forever. We're going to retrace, then find support, then move up again. All right, so that's something you're really going to have to sit on your fingers. Don't click any buttons, and maybe even walk away. If you can do that easily with a swing trade. We're basing this trade on, or I'm basing this trade on a 1 hour chart. Right? So there's no need to look within the hour, in fact. You may do so, but you have to realize you have to have a strong control of your emotions and not get swayed by that. That's a tough job. I know it's not easy, and it's going to take time for that to have that patience. All right? So, Ray, I still need to answer on that question. Okay, which currency are you looking at? Darshan pound is working its way upwards, and yes, it is indeed, definitely. Definitely. So that's why it's good to be cautious. All right, we have a 1 hour triangle. That usually is a continuation pattern, so we have to be careful there. Although we are at resistance, I would rather have a confirmation of the resistance. So I agree there with you, Darshan. Ray is talking about the dollar CAD. Let's see. So the question is, would you join the wicks rather than the candle bodies? I'm not sure what you're talking about now, which time frame actually. Sorry about that. That's good, Alcana. Very important. If you have patience, then you'll do very well. All right? You'll have a higher chance of succeeding. Of course, there are other factors that are important, but patience is really, really very important. Oh, just in general, Ray? Okay. It really depends, Ray. Just a quick Q&A there, folks. I hope you don't mind. Bear with me. It really depends on certain factors. It depends on the angle of the trend line. It depends on how many hits I have. It depends on how much price action I'm ignoring or cutting through if I were to choose the wicks. I want a decent angle. I want many hits, many touches, spaced out, close to price. So that's really subjective in my opinion how I do it. I could use both the wicks and the candle bodies. And then one more question, how long will I keep the trade? Good question. In this case, I would say I would be okay with 24 hours, but it also depends on the price movement that it does. The thing is that on a 15-minute chart, we can see that we're bouncing at resistance in a bit. If you look at the moving averages, in fact, price here went back to moving averages. So we could see something like this, for example. That is possible. All right, on this time frame. So that's something we have to be aware of. So that could have some time factor in it. Now, if we do this, oh, sorry. If we do this, this could easily take 24 hours. So that's, I think by tomorrow, we can revisit it together. It is true, though, that if we bounce here, as I said, sorry about that, I would be, what's wrong? I would be trail stopping it underneath the triangle and underneath the next support. All right, so that's it. That's, I would say, either 24 hours or at least, or just using the trail stop. Okay. Now there's one thing though, that the risk I'm running here is that we move up a bit and then go back to a lower fib. Okay, because the 382 is quite shallow, so that's always the risk. The safest stop loss is all the way here, but that's too massive in my opinion. Well, it's not that massive in fact. It's actually 102.45, so it's more like 100. Now it would be like 120 pips. So with that stop loss, the only target that makes sense, you see there are different swing trades you could take. If you use this stop loss right in here, the only reason you could take that trade is if you target at least this top. As you can see, that's actually more like a 4-hour swing trade. So you have different swing trades. An entry here with a stop loss of 120 and a target of 106 would be a totally different swing trade than the one I'm taking, as you can see. Still a swing trade. All right, that would be the conservative target of 106 at the top, or you can even aim for maybe something in here at the trend line or the target. All right, those are giving even better reward to risk there. So it depends what type of swing trades you like. Most of you probably think 120 pips is too much. So, but if you don't, then that's definitely a possibility that is less risky, in fact, than the one we're taking. Why is that so? Or I'm taking. Why is it so? Because the 382 bounce, I'm putting my stop loss under the 382 right now. But it could retrace deeper. If it does retrace deeper, this stop loss is safe underneath the trend line, as you can see, underneath the trend channel, while the stop loss here is actually in the middle of the field and is in the middle of a landmine area, basically. More risky. All right? Doesn't mean that the trade doesn't have to work. It's just more risky. And as you can see, that we're just aiming for a very small target compared to, in fact, the potential that it could have. Because if you look at that day chart, you can see the fact that we have that upside potential here. We're really aiming for a small move there. Right? It's a conservative target, even the 272. So there's even a potential of aiming for this minus 618, in fact. Alrighty. Thank you, Ray, by the way. Let's take a look at the yen. That was also interesting for me. We are in basically kind of a bull flag. If you look at the orange lines. All right, and in a way, this down move was back to weekly support right in here. We moved up, pretty good bounce, like a V, like a valley, right? A V valley. Then we made a bull flag right in here. So what I'm looking for is a break of that bull flag to the upside. That's the most interesting to me. If we do break to the downside, it could be a small trade to the downside, but I would say anywhere in here, we can already expect support back at the bottom of that bigger triangle where we have the purple line. So there's a bull flag within the purple triangle there, and we can see there the upside continuation to the back to the top of the triangle. So you can see that using chart patterns in itself already very valuable. So that's what I'm looking for. Break of that bull flag and triangle to the upside. Now, in the meantime, if you look at the 4-hour chart, you can see that bull flag is better. In the 4-hour chart, it almost looks like a downtrend, doesn't it? Because we're making higher lows and lower lows, lower highs, sorry. And in fact, we bounced off this level where we had support right in here. We have support levels here. We went down to test that, couldn't break it, respected that support level, and had engulfing 4-hour twins, just like the CAD, dollar CAD. That's why I like the dollar CAD and the dollar yen more than the pound and the euro and the Aussie, because although I do see reversal signs, the euro is ranging. The pound made a huge upside actually yesterday and is making a triangle, and the Aussie just has impulsive 1-hourly candles. So I need more confirmation for those, while these are kind of acting a bit better in my opinion. So that's 4-hour twins. Let's take a look at the 1-hour. Now, the reason why I didn't go to why I saved dollar yen for the last is because clearly the dollar yen had 4 hours of upside. I'm not interested in jumping in fact, right after a move like this already, and we're coming close to 1-hour resistance. So my interest is more geared towards when the currency makes some retrace here and we test this bottom. If I get a good 1-hourly candle right in here that shows like an engulfing 1-hour candle right in here and shows a square up of the 4-hour world, that would be interesting then to take that long, I think, to the upside. Does everyone see what I'm talking about here? really, please, if it's difficult for me to judge if you follow me or not. So if you don't hesitate to ask. Otherwise, I'm just assuming that you can follow what I'm saying. All right. So I hope I'm clear, right? Good. So something like that would be what I would be waiting for. The difference between okay, great. Thank you, Alkana Ray, for your confirmations. That's great. The difference with the CAD, by the way, is because you might be wondering why did I wait? Why am I waiting for the yen and not for the CAD? The difference, in my opinion, is and that could be a bit ambiguous, and it could depend on the charts as well sometimes. But we have a fractal here, and we broke that fractal. Now the fractal, in retrospect, might not be the best fractal because it's just halfway a move down, in fact, not a clear resistance level that's broken, in fact. So maybe a bit iffy in a way, the difference there between the CAD and yen. But I did say as well that we could see some resistance here before we move up on the CAD as well. So that was the difference. We did break a fractal, which was for me kind of the entry signal there for that upside. While the yen doesn't have that, well, that does actually also here, in fact. Yeah, it's tricky. You see, this is a fractal. I even ignored it. I hardly saw it just because it's such a small sideways move, in fact. In this case, probably because I'm in the CAD anyhow, I'd rather be a bit more cautious with the yen because I don't want to risk, I'd rather not risk kind of at the same place twice. So in that regard, maybe waiting for that retrace here, contrary to the CAD, it could make sense. So how far would that retrace go? No idea. It could continue downwards. I don't know. That's why I'd rather wait for price action confirmation in here on the 1 hour chart. Maybe even the 15, depends how aggressive you want to be. Excuse me. 15 definitely will provide more false signals than the 1 hour chart will. You can put a trend line here as well. You can see. That we're in this channel. We broke out of that channel now. So yeah, those are the main reasons. The price action on the 4 hour, the bull flag on the daily chart, the triangle here after this massive uptrend, of course, purple triangle. So 1 hour break of the trend line I showed you. So looking at the 15-minute world, I would think that something like probably like a bull flag is likely, like this. And then we'll get this AO back to the 0 line. And then you could see continuation. Looking at this 15-minute world, that's what I would expect. We'll see if that proves to be true, but that's what I'm expecting right now. So maybe we could put a fib on this smaller upside here. And yeah, 50 fib could be likely around 98.20 for that bull flag to end. But I would really like to see either a bull flag pattern like this, choppiness to the downside, or if we don't have that, then I want to see a monitor the 1 hour world at minimum. Well, I'll monitor it anyhow, but and I want to see either some reaction to these fibs. If we do get a reaction with a good wick, for example, like this, all right, then you could take it, or I could take it. I will take it either at the open, most likely, with the stop loss below that low, and target the 618 right in here, something like that. Now the entry is actually higher than taking it immediately off the fib, most likely. An entry based off the 50 fib immediately would give us a better price. Then again, we would have to use this as a stop loss. While if we get a price action signal, you could use the candle low for a stop loss potential. It is more riskier, but it is possible, which decreases the stop loss size. So yes, worse price, probably a smaller stop loss though. So that's what I'll be looking for. I don't think it's going to happen in our session because we only have 25 minutes left. But if I see it, I will take it on the account, okay? Because we talked about it. Now, it also depends. I have to admit there's some discretionary elements sometimes I use to take a trade or not. Most likely I will if I see this pattern. I never know though for sure, but most likely I will. If I would see what I just described here happening and unfolding, then I'll take it on my account here today. Let's see if that happens. Well, that's the dollar yen. Let's take a look at maybe the euro odd. Alrighty. Now the euro odd, I think we were 24th of July. Let me see. Yeah, I think we were looking at this together. In fact, I remember saying, I think I said here, remember looking at this and saying this is a major reversal signal. And here we got a continuation, bull flag, and I remember then saying that if we break the 4-hour high, I know that many were looking for something like this. But I remember that it was saying that if we break the tops in here, we're most likely it's different. We're going to do this. And boy, that was sure big run there. Surely a big run there, I should say. And that moved up 700 pips. So I didn't really. Most of it happened while I was away, unfortunately. But that was a good run there. So in the meantime, I think there's still some upside left. The question is from where. We're going to take a look at that. Before we do that, I'm going to give Akana the price levels. Basically, it's just not sure which price levels you want to know, Akana, but if you put a fib on this move up on the 1-hour chart, you would see it's a fib from 97.84 approximately to 98.58. So it's a 74 pip move there, and around 98.20 is the 50 fib. Alrighty. So this is the day chart, and well, that was just massive trading here in May. We really whacked it because of this. All right. That's just tremendous up move here. Now in end of June, we got a bit of a bigger retracement here, right in here. After a very impulsive first move up. But then we did see a spike, sideways, and again a continuation. So what's going on here? I would say, looking at this, we're probably in a fifth wave, I would say. And within the fifth wave, if we then zoom into the 4-hour chart, you can see probably 3 waves now. And within the 3 wave, you see a 1, 2, 3, 4, 5. So what I'm expecting is a wave 4 of 5 now. So I think we still have a wave 5 of 5 left. What that means is that we should not return below 144.70 for it, which is that top. Anyhow, those are resistance levels. Broken resistance levels, I should say. So, of course, when the currency goes back to that, normally that is a bouncing area in any case. That's the max I would expect. I don't think we'll get there, by the way. Just the maximum. If we put a fib on this up move, you would see that a 382 or 50 is more typical, which is around 147 and 146. Within that zone, we see a sideways move right in here. That's a supply and demand zone. That is usually a place of support or resistance as well. In this case, support, because we paused in an up move there. We had an up move, pause, continuation, sideways zone there. So if we go back to that level, it's a support level. So that's a 382.50, 146, 147 zone. I'm expecting a support level there. One way of measuring the time factor for the euro odd to be ready for the upside is if the AO, the oscillator, is back to the 0 line. We're almost there. So that could be the first indication that we are ready. Are we going to move up immediately? I wouldn't say so. I would think that if we do hit the 382 fib and bounce, most likely we'll see something like this and then go. Something like that. I'm primarily interested in catching it here and somewhere in here. So how will I monitor if we get those bounces? You probably know the answer already. Price action, right? Candlesticks, right? And especially a fib like that is massive, of course. And even if, maybe if it reaches the 50 fib, an entry order could even be possible. Depends on what type of swing trader you are. We didn't specify that. If you wouldn't mind putting a stop loss below 148, 144.82, you could put a stop loss anywhere around 144.50. Should be safe, and you could put an entry order, at 146. The only thing is it's 150 pip stop loss. But the reward to risk is okay though, because I would be aiming for the minus 272, which is at 152. So it's a 700, basically, no, it's a 600 pip reward versus 150 risk. It's a 4-to-1 trade. So it really depends on what type of trader you are, what your account size is, if you can take that, and if you like to trade, if it fits your trading psychology. All right, there are 2 different types of swing traders. This is the more larger time frame swing trader, while the CAD trade is more a smaller swing. If we're looking for smaller swings, then we can zoom into the 1-hour chart, and one way is seeing if, first of all, if we get a price action signal at the 382.50, or if we don't get that far, that's possible as well. You don't have to necessarily touch those fibs. Maybe, just maybe, for example, let's see, I should draw the fib from here because it's extension. Sometimes waves have extensions.
We in fact already hit the 382. This is the bouncing area as we speak. In that case, I would only enter though if we get an up, down, and the next fractal break. Just like the CAD, that's why fractals are important for me. You know, I'd rather have a more clear fractal, to be honest. But if we do have a clear fractal here, then that would be a good entry upon the break of the fractal with the stop loss here. That's how I would take this euro odd. So it depends. If we move lower, I'll look for price action signals or a break of the next hourly fractal. If I want to be more aggressive, I could even take the break of the next 15-minute fractal right in here. But that's more like an intraday trade, to be honest, because that's the entry is right in here. It's a stop loss here, and the target is already here. That's not a swing trade. That's really an intraday trade. So basically, that entry would be above last hour's high, and we will be targeting the next resistance on the 1 hour chart. That's an intraday trade. Does that make sense? How we've just identified 3 different levels of trades in a way. An intraday trade here, a potential intraday trade, and then a mini swing trade here, or the bigger swing trade, preferably lower. I mean, do you see the point? How you could identify that? Okay, great. If you don't, just let me know, okay? Please don't be shy. The sky blue line in an MA, but what period? That's, I think it's a 12 or 34. Let me see. It's a 12. This one. Yeah, indeed. Okay, and a bigger retrace, bigger reward up. That's true too. It's true. Yeah. Basically, they're all methods for trading the upside at different stages. So the 50-minute world, we'll just get the initial bounce, but because the bounce will most likely not go far because we're bouncing into resistance, probably see it move down and then up again. So the 1 hour world will be basically entering after that, after this respect here, while the 50-minute world, we'll be actually trading it to that resistance. This could be maybe a complicated concept for some, so but maybe not. Maybe everyone understands. That's great. But it's basically using support and resistance on all time frames to identify the path of least resistance and understanding where your most likely target is for that particular setup, that particular time frame, what is realistic, and preparing yourself mentally for the moves it could make and understanding what that means for your trade. And depending on what type of trader you are, you'll focus on that niche of yours, that particular time frames. And for example, if you are a bigger swing trade, a smaller swing trade, as I said, up, down, and up, you are entering here. This is stop loss here, and the target would be still the 152. And then you're aiming for this. That's a great trade. And this is really, if that were to happen, you're looking at, well, let me calculate it precisely here, approximately, because it hasn't happened yet. If that were to happen, you're looking at an 80 pip stop probably, maybe 100 in this case, but you're looking at 350 reward. That's huge. Those are big swing trades. Why is it that big? Because the euro odd, it really moved a lot. It moves a lot, and these are big fibs. It's a big mover. It moves 700 pips. So if you're looking for a tight stop loss, it's going to be tough to do that on the 1 hour euro odd time frame, especially if you use fractals. Alrighty. Anyhow, guess that's all clear. So that's about it. Let's review quickly. Euro dollar is moving up. Interesting. Moving back to maybe the top of this triangle. Who knows? $132.70 is a 1 hour resistance spot there. A break of that could see the euro dollar continue to the upside, in fact. So that's why it's good to be patient, sit on our hands, and wait for confirmation and not jump in the market. There is some space to the next resistance at 133. That's 30 pips. But consider the fact that the 1 hour bottom is at 132.46. A break of the 132.70 level would really be an iffy trade here. It's more like hardly a one-to-one here, looking at the risk to reward. All right? It's very iffy, as you see. Why is that the target? We cannot expect a break of the purple triangle there and the blue resistance in one go. That is the realistic target, in my opinion, especially in a range-bound environment. Look at this resistance here. We can't anticipate a break of that. That's major resistance here. So if we break this fractal and we put a stop loss here, which is a safe, technical safe stop loss area, would you want to take that trade if we have resistance levels, major resistance levels, and a huge range right in here? That's a question. Sorry if I didn't make that clear enough. Would you want to take that trade? We got 2 no's and 1 yes. Anyone else want to participate? Graham says no. So a few more, 4 no's. Okay. So indeed, the no's are winning. And I would say no. I'm no, of course. Yeah, no. Now, doesn't mean that we can't break through that resistance. But that's a trade I'll gladly skip. Let me say it this way. We can't catch every move. We can't catch every piece of the market. And I gladly, if it were to break, I gladly skip it, basically, and kind of rejoin later after we break that purple line somewhere up in here, above that resistance. That's where I would like to trade it. Absolutely, Graham. The thing is that the reward to risk is iffy at best, maybe a one-to-one, probably not. I can calculate it more precisely. You're looking at 30 pips risk and probably a potential of 20 pips. It's actually less than one-to-one. That immediately disqualifies it. But also major resistance. There's a lot of sideways. We're buying it. We would be buy right along, right at the top zone of a range, basically. Too risky. That's the reason. Okay, and if you wondering why. Yeah, even if we take away this blue line, it's maybe 1-to-1 at best. 28. But then oh, I deleted my chart. Hang on. Okay, it's a 1-to-1 at best, exactly. In fact, but then the target is exactly at the same level as this resistance. And if you look at this previous move, I corrected it and added a line here because there's a whole range of wicks and resistances in this zone as well. But the true answer, in fact, the reward to risk is really just a sub thing. In fact, it's just a side note. The true reason, in fact, is that it would be a long at the top of a range. This is the top quarter of this range. If anything, that's more a selling zone than a long zone. That's why. That's the main reason. Even if this would be a 1.5-to-1, I wouldn't take it. It would have to be like 3-to-1 probably, and then the currency would look different because then we're probably buying it closer to the bottom of the range. That's basically what it boils down to. Alrighty, cool. So that's the Eurodollar. Now the downside, in fact, has also that limitation, by the way. That's why I just didn't like it, because the space is very limited here to the downside as well. Maybe a bit more, in fact, because we are set a bit higher. The only problem with the downside is, although it has more space, technically kind of still more biased to the upside, although we have heavy resistance here. So that's why the Eurodollar is just like, you maybe understand now more why I wasn't too fan of it at the beginning of the morning. Maybe you were wondering why is that so, but cheers, Graham. Thank you so much for being here. We're going to wrap it up in a few minutes as well. If you'll be so kind to answer the inquiry at the end, I think there is, that would be great. Pound is still moving to the upside. That's why it's always so dangerous to anticipate something too early. Let's see how it responds to this resistance and the support. Those are the main levels here. If it does break support, be careful of the 886. That could be definitely a resistance area. So 886, this top, this bottom are key levels on the pound. Aussie is again moving up. As I said, there is an intraday trade there. You see the oscillators back to zero line here. And that's why I didn't take that swing trade, because I expected more short-term upside pressure there. That's indeed what's happening. So let's see how far that short-term pressure can go. I don't think it can go that far. I think that upside is limited. As I said, it's a short-term counter-trend upside trade. It's definitely counter-trend. And the question is, where is it going to bounce? Probably 382, I would say. If we get a rejection wick there, I'm looking for downside. Be careful of when it does move down, it will encounter probably support, or at least some bounce. I'm not sure how much bounce. That's always unknown, of course. But some bounce will probably happen there. The most safest target, therefore, is something around 89.20. If you catch something in here. That's the odd. Dollar CAD, Doji last hour, as I said, that doesn't surprise me because 50-minute world is retracing there. So let's see how that acts. There is some risk here, as I said. There's always risk, of course. So let's see how it goes. It was worth taking in my opinion, but there is that chance that we go lower. In that case, I'll just take the trade there again and try to compensate the loss or break even of this first one. Dollar yen. Then I'll take a look at some questions there I saw after this. Dollar yen, I'm expecting this downside to pop up here a bit and then move down and do something like this to either 382, 50 or 618 fib. Well, probably 382 or 50. It's max 618, I would say. Normally, but any of these fibs it could be, in fact. But a bull flag pattern like this for more upside continuation. Even the 382 could be the bouncing spot. Looking at the 4-hour engulfing twins there. So expecting yen upside. Why is that? Well, because we're in the bull flag where we had a massive day here, so we're back at support. So a bit of a bounce, even if it's back to the top of the bull flag, is likely. That is the most conservative and realistic target there for any trades, and probably would even be targeting a lower. Or if so, this would be a good spot because we could see resistance there kick in again and move down. Euro odd, as I said, anywhere between 146 and 147, or if we get an earlier bounce and then the next break to the upside. So that's what I was primarily interested in today, the CAD, yen, and the Euro odd, and we took a look at the Aussie, and Aussie in a way, but not now, later. We took a look at the Euro and Pound as well. We're going to take a look at some questions and we're going to round it up. Joanna is asking, why are some fractals close to each other and some are far apart? Well, that's because fractals are indiscriminatory there in when they're placed. There's always when you have two candles to the left and two candles to the right that are higher or lower. If they're lower, then the fractal's on top. If they're higher, the fractal's on the bottom. And anywhere where that happens, you'll have fractals. Two candles to the left, two candles to the right. Why are they important? Because they indicate a break of resistance. Now, some fractals not all fractals are created equally to each other, in fact, because some levels are more important than others. For example, fractal in here, maybe, or here you have a fractals bunched together, so they're kind of supporting each other. But some fractals are more important. For example, this one you can see is a clear top. This one isn't. The blue circle isn't here. The green circle is. So, it depends. But the fractal, in any case, is a resistance, always a resistance support. Just depends if it's minor or major. Anyone looking at tops or bottoms is looking at a fractal, in fact. If you would use the indicator, you would see it. Some people don't use it because, but it's just a visual tool for that, in fact. So it's a visual tool to see easily where those tops and bottoms are. And most of the time, when you got lower lows and lower highs, like here, you can see the fractals confirming that very visually, very easily. So the first time that I get the opposite, where I get higher highs and higher lows, that's when I want to go and take the trade for that upside, because then the currency is showing the opposite. That's why I'm interested in that turn, and that turn is confirmed with higher highs and higher lows, and I use fractals to confirm that higher high and higher lows just as an easy visual tool. Okay, does that make sense, Joanna? Akana is asking about 4-hour chart. I think the dollar yen probably. Akana, if I would wait for 50. The yen does have a tendency to bounce off the 382. It's a characteristic of the dollar yen, so that could be the turning spot there. Not only is the fib important, but also how it moves, the pattern that we see, and also the 1-hour price action. And the AO on the 50-minute world. Those are the things I'll be looking at. All right, folks, I'm going to wrap it up today. I hope you enjoyed it and learned and earned maybe later on today some stuff that makes sense. Oh wait, I saw another question. Sorry. Let's see. You have a great day. I missed some comments here. Have a great day too, Bogdan. Yeah, I saw the email. We'll do that. And Ray is asking why I use a 12-period moving average. Yeah, it's for the immediate trend direction indeed. You could use 8 as well. I mean, it's arbitrary basically. I mean, how do you say it? It's flexible. It depends what testing you've done with it. So I like 12. I mean, I'm sure 8 will work as well. It depends. All right, thanks, Ray. Glad that it helped you on that. And Akana is talking about the euro odd. Okay. Take a look there. The 50 fib, yeah, not sure if we'll get that far. Yeah, it's possible indeed. Look at the 4-hour world; it could be possible, but we have a pretty big support level in here as well. So both of these zones are pretty big, pretty massive. I would say a bounce here could happen. Then it depends if we do this, or if we make a bigger correction down to this level and then bounce. That's a bit difficult to tell at the moment. Both could be really bouncing spots. Tricky. And Ray is saying that the yen has several good confluences for longs at 98.30. Yes, I agree. And the 3-2 is, yeah, it has a special relationship with the yen, so makes sense. Alrighty, folks. See y'all tomorrow. We're going to take a look at long-term trading, swing trading, and intraday trading, so just our usual mix. And Thursday, of course, we have an educational webinar at 5 p.m. London, and then our intraday trading in the morning. And make sure to take a look at Admiral Markets website where you can see the spreads. Dollar yen, for example, I mean it's less than a pip. So for at least this Admiral Markets Pro, and you don't need much capital for that Pro account. Okay, so look into that if you like. I definitely recommend that, and wish you all good trading. See y'all soon. Cheers.